Good afternoon, everyone, and welcome to today's webinar. Before we begin, our NAIOP Vancouver past president, Jason Kisselback, will say a few words.
Hi, everyone. Thanks for joining us today. I hope you were able to tune in early to take advantage of the networking feature of our new webinar platform and had a chance to say hello to some of your industry colleagues. Welcome to our second webinar of 2021. We're excited to present part 2 of our market update from the brokerage perspective. If you missed part 1 of this great discussion featuring the landlord and developer perspective, please check out the NAIOP Vancouver website where we have a recording and a blog post summary. As always, thanks for this quality programming goes to our breakfast/webinar committee, and they have a great list of topics lined up for 2021. Please mark your calendars for the next 2 webinars that we have planned for April 22nd, which is a panel discussion on investing in alternative assets, including hotel, self-storage, and medical properties, and on May 20th for a national view of the commercial real estate business from the CEOs of CBRE and Colliers. Finally, I'd like to thank our sponsors for the event. Our featured sponsors today are at the Platinum level, Grosvenor Americas, Ani Group, and Cadillac Fairview. At the Gold level, BOSA Development Corporation, JLL, Madison Pacific Properties, and Warrington PCI Management. And at the patron level, Blackwood Partners, Dialogue Design, PC Urban Properties, and Ventana Construction. Now I'd like to introduce our moderator for today's webinar and chapter president, Anthio Yuen, Director of Research and Strategy at GWL.
Thanks, Jason, and welcome everybody to part 2 of our 2-part Market Outlook series for Metro Vancouver. Once again, we do appreciate your support and hope you're all doing well. So as we all know, brokerage is such an important part of our business. They link tenants and landlords, buyers and sellers, and often see trends well in advance of when they're set to occur. So with our second webinar for 2021, what we want to do is sit down with managing directors with some of the largest brokerage and advisory firms across Canada and focus really on 2 main topics. One is, how has the brokerage business changed the last decade? What are they seeing in terms of impacts from COVID? What is impacting their disruption views, as well as what's impacting their views on innovation and growth? And second, because these groups often have a view as an intermediary on trends that are happening in the market, what are they telling their clients, which include investors, landlords, as well as tenants? And so on to our wonderful panel, and with us today is Maury Dubuque, who is the Senior Managing Director with Colliers. We have Michael Keenan, who is the Managing Director for Avison Young, Janet Patricelli, who is the VP Managing Director with Devencore, and Hendrik Zessel, who is the Executive Managing Director and Western Canadian Lead with Cushman and Wakefield. And their full bios are available on our NAIOP Vancouver website. And we do appreciate the questions that have been sent in advance. We may or may not have time to go into a formal Q&A, so if you do have any follow-up questions, you can definitely send it to us afterwards, and we're more than happy to facilitate those questions afterwards. And looking at the panel here, could you maybe just switch Hendrik into the main camera area? Perfect, there we go. Well, and I was also gonna say, I think this is the first time that I've worn a suit so far in 2021, and I think this is probably the second I've worn since the pandemic. So we're all looking good. I'm the only one in the home office, where everybody else is obviously at the in office, so which is great to see. So I'm getting a bit of a feedback here. Is there somebody that is able to maybe mute their line for a quick sec? If not, it's okay, we can keep going. So maybe to kick off the discussion, we'll start off with a bit of a rapid fire. And maybe we go alphabetical order. So Maury, Michael, Janet, Hendrik. One word to describe 2020 from your personal view as an industry leader, professional in the market. What are your thoughts? Maybe we can go in alphabetical order.
Personally and professionally exhausting would be the word.
Me? Perseverance.
Perseverance is great.
Reflective.
Yes, reflective. Oh.
Challenging.
Challenging. Okay, that's great. Well, I think that was a 2020 view. So maybe one word to describe 2021 from your view as a leader, industry professional.
Vaccine.
Resilience.
Hopeful.
Opportunistic.
Oh, that's great. So definitely a bit more of a positive view for 2021. So maybe that's a good link into my next question. So let's go one word to describe the current state of the Metro Vancouver commercial real estate market for 2021.
Remarkable.
Invigorating.
Fragmented.
Resilient.
Fragmented, resilient. We see a lot of positives. We see a lot of resiliency, and I think that lends into the dialogue that we had at our first part, just talking about how strong the commercial real estate market in Vancouver is. So maybe a little bit of a longer question, two-part question, but again, we'll try to keep it short. What has surprised you the most the last 12 months with respect to the market? And secondly, what has surprised you the most about your own respective organizations?
You want to do the same order?
Yeah, we'll go the same order for Maury.
Maury's up.
Okay. What surprised me the most last year? I was surprised that we have a proven business continuity plan, and work from home can work for a sales and advisory business. So happy with that. I think the second thing is, we work in a sort of everything's urgent environment, and I think we slowed down a little bit last year. Maybe to more accurately assess the unknowns, and there's obviously lots of unknowns. And I think as a result, we probably provided better advice to our clients, and I think our clients made better decisions as a result of that. So, we had more time, we took more time. So, and I guess if you want to be known as an advisor and not a broker, it's probably what you should do.
What surprised me most about the last 12 months? I guess a couple of things. Quickly, the pricing of most, or many anyway, income-producing assets that they maintained or even exceeded their pre-COVID levels. I'm also a bit surprised by how relatively few offices have reopened over the course of the last 12 months, certainly downtown. And what surprised me most about our organization is that we pulled it off. We managed to get all these people up and running in 48 hours, collaborating and connecting and conducting business. I can take no credit for it. It's all Leanna, Amanda, and Gerpy, but God bless their hearts, they pulled it off.
That's great. Janet, what about you?
Well, I'm going to echo a little bit what both the gentlemen said. I think how quickly we adapted, being us, the organization, and in general, how quickly we adapted to the virtual world.
That's very
cool.
Sure. Hendrik?
A lot of the same comments, but what surprised me about the market was the residential market and how fast that came back, and the acceleration of pricing in that, and let alone the multi-res side of the business, given all the government intervention in that side of the business. So you've got people selling, people buying, different risk profiles that people are looking at. I think on just on the advisory side, because I think that was part of your question, I think that's going to be extremely important moving forward, certainly in the office world and the workplace environment, and how we're going to move forward in just occupying space in general. And what are the protocols that have to occur, not just now, but in the future, to make people feel safe about coming back downtown. So, and the other is just the adaptability that we all, are doing. We have to adapt, and we have to change. So, there's been positives and negatives. And again, as Michael said, I'm surprised at, what the market's doing.
Yeah, fair enough. Well, I think that's a good segue into the first part, really about your own respective organizations. And so COVID has accelerated change. It's disrupted a lot of key trends across a lot of business areas, finance, tech, commercial real estate as well. But in your views, and maybe we can start with Hendrik and go reverse alphabetical order. So Hendrik, Janet, Michael, and Maury. How has COVID accelerated or changed the broker's business? What do you think is a permanent change going forward? But also, what do you think is temporary, and once things start to open up, we'll go back into a bit of a normal course?
Yeah, I think, well, obviously technology is a big, we've all adapted to technology because we had to. So old guys like me that, didn't use it as effectively before have to start using it. It's opened up, I think, communication and shrunk the world a little bit in the ability to connect with people virtually, which, you do it by phone. At least here you can see somebody and go from there. So, that's certainly been a change. I think the fundamentals of our business haven't really changed. It's a people business. You have to be on the phone. You have to be, working it and know what's going on in the marketplace. That really hasn't changed. So you can't get caught up too much in the technology side of it because, again, you still need to try and do face-to-face meetings as much as you can because they're still the most impactful way of communicating in my mind. So what was the other part of the question?
What trends are permanent and what do you think will be temporary?
I think one of the permanent trends that may fade away, but is the work-life balance moving forward. And I see that maybe over time, the next 5 years changing, but I think certainly in the next 5 years, we're going to have a real balance in that side, getting people back in the office and finding a hybrid that works.
Great. Janet, what about your perspectives on that?
Well, it's very similar, I think. Well, for us, we had to upgrade, centralize, reorganize our data to ensure that it was all secure and accessible. So that was a big change that we kind of accelerated. One of the and I guess further to what Hendrik said about one of the things that might be permanent, and I hope I'm wrong, is a work-life, home-life balance. Like, it's always been a kind of a blurry line, but I think now the line is gone. Like, at the end of the day, I'm not depreciating anything at all, but we're doing office leasing. And in my decades prior to, I've had very few calls at 7 o'clock at night. But I just think of this week, I had 2 calls at 7 o'clock at night at home. And of course you have to pick up because you're not at a cocktail party, you're not on vacation, you're home. And because we're all virtual, they expect, all the answers now. You can't say, okay, I'll call you in the morning when I get to the office. So I think, that's something that seems quite common now, but I hope that changes. I hope that's not a permanent thing, but it might be, unfortunately.
Yeah, and I think in terms of the flexibility, sometimes you can be over flexible, and those boundaries between home and work are actually a good thing, because I think a lot of people have gone through those transitions and those definitely, kind of late calls or early morning meetings as a result, right? So Michael, maybe get your thoughts on, brokerage and how it's changed.
Good God. Well, for me, on a macro level, adversity is a wonderful teacher, and there will be a variety of best practices emerging from the ravages of this pandemic, and some of them are emerging already. Others are coming, and Hendrik and Jan have already raised a couple. To my perspective, just on my day-to-day routines, the things I've noticed is clearly the technology and people learning to adopt it that swore they never would. Business travel is all but diminished, and that was a big part of our lives for a while there. And then, of course, just an overwhelming open-mindedness to any and all forms of what the new workplace environment and life balance could be. I think all of them are permanent in some form or another, but they're not yet fully manifested, but they're coming.
Yeah, fair enough. That's great. Maury, what about you?
Yeah, I don't know if I have anything unique on that. Certainly the adoption of acceptance of technology by a lot of generations. I mean, my mom's on Zoom, so figure that out. There is going to be far less business travel for sure. The Zoom calls are kind of disconcerting to me. To Hendrik's point, it is a people business, and we probably had more sort of disputes and discussions with clients than we have had in other years. I think because of that, and there wasn't that communication. And then to the workday, it seems like the Vancouver workday was 8 to 5 or whatever it was, of course, except on Fridays. It seems to be like 6 in the morning, 7 at night, and God forbid that's a permanent change.
Yeah, fair enough. I guess maybe from a side question, and I started my early days at CBRE, and I remember a key part of the brokerage side were those morning meetings for office, for industrial, for retail. Like, how are those Zoom calls gone? Do you find that they're just as productive? Are you finding that you're able to access a wider, base of broker teams, or do you find that you'd like to just get back to the office and get going in a physical environment? Maybe that's a question for Maury to start with.
Yeah, well, remarkably well. We're after a year to come up with some new content, some new ideas and new guests, and but in 25 and 40 people on those calls, we do by asset class. So we made it work. I don't think it's ideal, and previous when we were in COVID times, we were in a boardroom and there was a whole bunch of discussions going on between the agents. And these days, there's more discussion going on. Whoever's hosting the meeting that day. So I will relish the time we get back to the boardroom with those meetings.
Yeah, fair enough. Anybody else have any comments on that?
Yeah, well, I'll jump in. I mean, I'm finding that those are actually more productive than our ones in the boardroom, simply because more people can access them, and our attendance is higher, and we can cross-pollinate disciplines. And so, for instance, like during last year when things were hot in the industrial but slow in the retail, it was a positive for the retail guys to hear the industrial guys that they were actually busy and there was life in the business. So I don't see us changing that moving forward. I think again, it's just a better way for people to gain knowledge in all the disciplines and round out their knowledge of real estate.
Anybody else?
Well, I echo that. I think they are great. It's a great, it's a great luxury to be able to do that. What I do miss, not being in a boardroom, is feeding off other people's energy. And leaning over and saying to somebody, hey, what are you doing, or what's going on, or that kind of relationship that you have with one another, the energy you get, the sound of laughter in the boardroom is different than, people laughing on Zoom. It just feels different. Obviously, it's convenient. Obviously, it's great, but it lacks that human touch, if you will.
Well, Michael, do you have any comments on that, or do you want me to go to the next question?
It's a similar kind of messaging, but brokers, by their very nature, and frankly, people who are attracted to brokerage business, they adapt well and they adapt quickly. They're problem solvers. There's a wall here, they find a way around it, and they carry on. And so there should be no surprise to anybody that brokers can function fairly well in this remote environment. But they'll also be the first ones to tell you that it's nowhere near as effective or as enjoyable as doing it in person in an office.
Yeah, and maybe that's the next question I was going to ask, and maybe this is a question directly to yourself as well as for Hendrik, but can you share any examples of how certain brokers in your office have adapted to kind of the new reality and have done very well? And it doesn't have to be specific, but in terms of their business, their market practices, whatever that may be. Well,
people are clever, and they find ways to be successful. And I have probably two examples of groups. Like one on the capital market side, some of our very seasoned veterans who are very accomplished and have over the course of recent years, focused on very large, very complex transactions. And the market simply wasn't producing many of those to work on. So they kind of pivoted their business plan away from hunting elephants into taking whatever the market was giving them. And the market was giving them a larger number of smaller, not small, but smaller transactions. And they went to work building up the business plans that would work in that environment. And it was very successful. They enjoyed it very much. And I wouldn't be surprised if they bring that forward into whatever they're doing next. But on the occupier side, we have some teams here that work very closely with major retailers and the like who have locations in several places, many of them. And while there was still some expansion going on, it was also a time to sit back and take sort of a more advisory consulting role and say, let's take a look at your entire portfolio of leases. Let's come up with a specific strategy for each one of these, and then we'll act on those strategies. So it kept everybody busy, active, doing important things. But at the end of the day, of course, the client's portfolio has never been in better shape. So there's always a way. You just have to kind of adapt to whatever's going on around.
That's great. Hendrik, do you have anything you want to add on that, or?
No, I think Michael covered it fairly well. I think the other is, as you said, brokers are resilient, so they start to see the trends in the marketplace, and they follow what the trends are in the hopes of making money and obviously servicing their clients. So, if I look at what happened, for instance, multi-res, what's going on in that market where there was a stall and all of a sudden there's activity. Why? Because people still view it as safe and the financing is cheap. Likewise on the retail, you got a lot of retailers that are having a hard time, and yet there's availability of space, which there wasn't before. So again, there's new entries coming in, and again, the brokers are looking at what the opportunities are. They're listening to the sound bites, and they're following the trends and moving forward. And as Michael said, the brokers wake up unemployed every single day. They're highly adaptable to figuring out how to make money, and they get down and they get up and they get highs and lows, but at the end, they're deal junkies, and they try and do the best they can with the clients that they have and give the best advice they can based on what's going on.
Well, and I guess that's another question that we had for this group, and maybe I'll direct it to Maury and Janet. So I think the traditional idea is you start in research in brokerage, you go into a junior broker position, and then you start to specialize in either a certain market or asset class. And generally speaking, when the market is doing well, office is doing well, industrial is doing well, but with office and retail somewhat disrupted as a result of COVID, how are you counseling your younger brokers to kind of pivot or not as well? And how are you telling them to adjust their careers as they move forward? Maybe we can start with Janet.
Sure. Listen, if you're new to the business and you're young to the business, it's probably most challenging for you because your network or your list of connections is much smaller, and that's a given. And I feel for them for sure. But also the ability to shadow, to go on tours with people, to sit at a sales pitch, to have organic conversation in the hallway, like, what did you do today? What would you do in this situation? Those are harder to come by, and I think those are so important in teaching and leading the junior group. One of the things we did, we've done a couple of things, but I'll just give you one example. Is we started soon after the pandemic. We started what we call a legal power hour. So once a week, with predetermined topics, we have the new brokers, the more seasoned brokers, and we bring in a lawyer, and we discuss whatever is the hot topic, common questions that tenants and clients might have. How does this clause work in today's environment? How could we change the wording? And I genuinely mean this. I value how lawyers' perspectives. And so having a lawyer in there, having seasoned brokers, sometimes we have people from other provinces come in and participate. All of that, I think, helps the new and young brokers, to be connected, engaged, even educated. And at the very least, if that gives them the confidence to ask the right questions at the right time, then I think that's helpful and supportive.
That's great. Maury, anything on your end?
How would I answer that? Well, look, the top third of our agents did extremely well last year. I'd say the middle third did really well. And our agents with less than 5 years struggled. And I really feel for them. They have relatively small networks and very few influencer relationships. So I literally had calls last year from young agents who said, look, I don't know who to call anymore. So it was super difficult, and it was really difficult for people that were in office leasing. Agents need relationships and meaningful level of production, and that was absent. It was tough. With regards to the expertise question, my view is that it's never too early to start on the path to expertise, and we did work with several of our young people to get that journey started. And I think the reason is obvious. In times of crises, our clients weren't, or someone with a passing familiarity with someone with an illusion of knowledge. We were looking for experts. And So we continue to believe that's the best way to advance the career of our agent.
Yeah, that's great. Anybody else have any comments on that front?
From my perspective, it's the solemn duty really of a managing director or anybody that's training young people to get them on the right path and have them become, with the idea of becoming an expert in something in such a way that no one will want to make a decision about that particular area of expertise that they've developed without at least seeking their advice. And it's philosophically an important part of how we try to raise people here, and we try to keep them in their lane until they get to that point. And if they tend to, the hard part has been in recent times because the market has been so frothy and in so many different directions that they've been tempted to chase something shiny over here and something shiny over there. And it's like dogs chasing cars. That program seldom ends well. And so we're finding ourselves that the COVID has actually given me the opportunity to reinforce the importance of the basics, getting back to basics and staying in your lane and operating within that lane. There's lots of room and lots of flexibility within that lane, but not to divert from it. So I'm using the COVID situation very well right now, frankly.
We also, similar to Michael, I mean, we try to get the young people to develop a brand so that they're known for something and somebody wants to call them for their intel. And part of that is knowing their territory or knowing the discipline well and understanding exactly what's going on today, not what happened yesterday, but what they're seeing in the marketplace to be able to guide their clients in terms of where the future might be going. And so likewise, like Janet, we do a young brokers training every couple of weeks with different scenarios, different, tax things, legal, whatever clients. And again, I think, we've got a fairly open office in terms of senior people that will help the young. And I agree, it's hard when you haven't got physical presence, there's more isolation that goes on with that. And it's a little harder to, do the bump in factor and ask the questions. But again, these people are very adaptable. But again, the brand is really important. Why am I going to call you? That's the most important part. I want to hear what you have to say.
Yeah, and I think the difference the last couple of years has been the prevalence of data, market information, and I know that brokers usually have provided such a key role in terms of primary market data, providing information on stats and listings and absorption, things like that, and that definitely still is the case. But I think that as you look forward and you do have incumbents or groups that are coming in and challenge incumbents in terms of producing market data, you have a fairly competitive brokerage industry, especially in Metro Vancouver. What do you think is kind of those kind of niche areas in terms of providing emerging areas of value for your clients, whether or not that is investors, landlords, or tenants? And maybe I'll start with Hendrik.
Well, I think I just said it a little earlier. I mean, it's market intelligence, and when you look at the stats and all the things that you produce, those are all great to formulate an opinion as to what we believe the market is. But it's really the on-the-street knowledge that the broker brings to the table in terms of what they're sensing when they're talking to people and clients. Let it be leasing investors, whatever. And again, they're trying to identify where the opportunities are. And like, again, the question is the rent going up? Is the rent going down? Where should you guide your client based on what you're hearing on the street? And in many cases right now, if I look at the industrial market, the rates are going up. Kind of like, okay, why? Because there's no supply and all of a sudden it's tight. What's happening in the office market? Are we holding face rates? Are we increasing inducements? What's happening in the residential rental market? I mean, people are performing, certain prices, but are they giving away free rent? Are they giving some allowance? Like, all those things are important because sometimes the data doesn't actually show, what a net effective rate might be on an office deal. So that's intel that the brokerage world, brings to the clients.
Yeah, I would say from my own personal experience, I mean, we leveraged the views of, what's happening in terms of global law firm space and design and some of the brokers that specialize specifically in that space. We've definitely talked to brokers that are specializing in third-party logistics trends as well. And I think the benefit for us on our end at GW, being an investor developer, is getting views that we normally wouldn't get through the day-to-day, because we do have touch bases with our own tenants, but it's really those larger themes that we get from the brokerage industry. So with, maybe as a bit of a follow-up question, and maybe I'll direct this to Maury, is, technological innovation is key for pretty much any business nowadays. Where do you think tech and brokerage intersect? Do you find it a challenge? Do you see opportunities? And maybe I'll direct it to you first, Maury, and then get maybe the group's opinions that they want to contribute to that.
Probably the least capable of answering that question. And look, I've seen lots of real estate initiatives, and they seem cool. The reflection, I think these things are probably very utility and commercial relevance. So that supports a firm called Techstars that helps commercialize their products, and some of the things that businesses that they're supporting are quite remarkable. For example, we had AI firm, and I can't remember the name. I wish I had it. I'm sure remember. Deserve the plug. An AI firm that scanned leases for keywords and phrases that you use in the exercise. So I had to do that as part of their early brokerage days. Their savior for kind of tool. So lots of stuff, and the other simpler, we've got a lot of use out of Matterport. In fact, we bought a second Matterport last year to accommodate the demand for that.
Great. Anybody else have any perspectives they want to share on that?
You're trying to determine or you're asking a question about where we see brokerage and technology kind of interacting and connecting? Oh, goodness. There's a refinement of our delivery, service delivery in the brokerage business. It's been underway a while, but it's going to be refined and it's going to be accelerated very quickly in terms of providing a really holistic set of client solutions, very customized set of client solutions that are all supported by a level of data and analytics, the likes of which we've really never seen in this business before. And it's not, is it coming? It's here now. And so you talk about, does it intersect? It does more than intersect. It's like a DNA strand, or it's really like a forging of a connection that is just forging now and is about to go like this. It's just the level of data, the array of data, and the depth of analytics that clients are demanding to this day requires an entire rethink of how brokerage services are delivered. And it's underway right now. It's a pretty exciting time, to be honest with you. There's opportunities right now. We can get real-time data on, say, the downtown Vancouver office market on an app on your phone. It's here. It's early. It's like the base of a hockey stick, but it's all coming together. They're not just intersecting anymore. They're going to become one. So strap yourselves in. It's going to be fun. You're going to enjoy this. You're going to particularly like it, Anthio, I think.
Yeah. Fair enough. Well,
about Avant, for example.
Well, I appreciate the answers for the tough questions around tech and brokerage. So maybe transitioning into a discussion on the market side is, as intermediaries in your cases in the market, you get the benefit of seeing trends across asset classes, and especially in your position being managing directors. So if you take a look at the last 12 months and maybe looking forward, what is one positive macro trend that you're seeing that is going to impact the Metro Vancouver real estate market, and perhaps one negative on the same vein? And maybe we'll do a reverse, and I'll start with Hendrik to provide his perspective.
Well, I think one of the positives that we're seeing is the rental supply is increasing, and rents are somewhat stabilizing on the residential side. Negative. What's changing that's negative? I think that it's the e-commerce effect on retail, and I would say that that has to morph and change over time. But I think the people that adapted quickly on the retail side are going to survive, and the ones that didn't aren't. And I think that'll be a negative moving forward for a period of time.
That's great. Janet, do you have any thoughts on that?
Well, I absolutely agree with Hendrik. Maybe I'll take it a little bit this this way a little bit. Further to what Hendrik was saying about the residential market, for example, I think when the lockdown happened, a lot of people looked at how they lived and where they lived, and maybe people moved, whether they re-immigrated to somewhere or re-immigrated home, or they moved to a different neighborhood. Maybe a change as a result of that is that neighborhoods will change. Maybe the supply or the demand for suburban office will increase, or maybe neighborhood retail will change. Maybe even deglobalization. I mean, that could certainly be a positive trend, because I think change is usually good, and any sort of movement will help our economy, will help our industry. So I think that's good.
Michael, any perspectives? Good, bad part of the market?
Oh, it's a lot of it's subjective, but in terms of good, I would say that there's a surge and perhaps even a pending tsunami of interest in everything to do with sustainability and minimizing carbon footprint. And I think it's going to be transformational. I think there's signs of it already melding into our world, and it is just the early stages of it. And for those of you young folks that are on the call today, you're going to look back 20, 25 years now. I think you're going to be pretty proud of what we've done here in the real estate world on that front. In terms of negative, and I'm not sure if this is really negative, but it's something that does puzzle me a little bit, is just this chronically low vacancy in industrial. That's sub 1%, and it's creating an unnatural tension that's really putting significant upward pressure on rents and values. And I know it's a tricky subject, and there's people listening today that are far better equipped to deal with than I am, but it's not like something we can keep dancing around. I think the problem is going to hit us in the forehead pretty quick. So I think we're going to have to come up with some clever solutions for it, because retail and all that's gone with it and how it's changed is just putting another dimension on the demand. It's accelerating that issue. So it's not like it's the end of the world or anything. It's just it puzzles me that we can't come up with a solution for that one. So anyway, that's
great. Well, Michael, going back to your comment around ESG, I think because there's obviously a lot of focus from major investors, the finance side, major pension funds on that definitely is another area that's going to start to hit the advisory side, I think, pretty rapidly. I think a lot of groups are starting to look at climate change risk data and how that's impacting their assets specifically. So I think that kind of dialogue and terms will start permeating into the brokerage side.
It's exciting. I like it.
Yeah, that's great. Maury, thoughts on positive and negative?
Sure, maybe not a trend, but we absolutely have an exceptional development capability in Vancouver, and I think I'd argue that makes our assets more attractive to investors from around the globe. I'm happy that we also remain a destination of choice for capital, and a cliche, but perhaps not like in previous years where outside capital was looking for outright acquisitions. There's lots of money running around Vancouver right now. We're at equity positions, partnerships, JVs. So we're great in this location. Being too active in Vancouver. Negative, I'm going to jump on Michael's idea. The lack of manufacturing jobs in Metro Vancouver has bothered me for years. I got a stat from Eric Adderneck, who told me that 4% of land in Metro Vancouver is owned for industrial, but that 4% supports 27% of jobs. So 4% of the land is owned industrial, 27% of the jobs. So 367,000 jobs in our high eight. So driving right draws include right.
Yeah, so I mean, that's the comment that Maury made is a pretty interesting one, because I guess my question for Hendrik is, you're in charge of the Western Canadian market, so Victoria, Edmonton, Calgary as well, and can you give a little bit of a perspective of Vancouver as it relates to those markets? Because I do know that there's a bit of dialogue on Victoria and potentially a bit of growth on that side with work from home, and then vice versa. Obviously different challenges and opportunities with the energy markets in Alberta.
Sure. Well, let me start with the positive. I mean, Victoria's been active, and if anything, the activity has increased, partly because of lifestyle changes, that we talked about with COVID. The other is there's a balance there between sort of cash flow and appreciation, which I think investors are liking because they can still get a yield and a bit of a growth story along the way. So I would say pretty well in every asset class over there, there's activity that we're dealing with. Even on the office leasing side, it's a fairly tight market and we're getting activity. And up and down the island, again, purpose-built rental is very active. Retail, we've sold a number of retail shopping centers on the island. So there hasn't been a tremendous slowdown there. If anything, I would say there's been an acceleration, certainly on some of the multi-res and some of the people moving over there for lifestyle change. So that's a pretty positive market. Calgary and Calgary's somewhat different than Edmonton, and certainly the office market in Calgary has been challenged, I would say, for the last number of years. And this certainly hasn't helped it. And the movement there on that side is pretty slow. I would say that residential lots and housing and is somewhat active. The industrial market is somewhat stolid. I think it's found a level in terms of the leasing rates that are there and the values. And again, you can get yield, and I'm not sure how much upside there is in the growth, but it's certainly an active industrial market. Edmonton, has the challenges in office, but not the same degree that Calgary does. Retail, I would say, is more challenged in Edmonton because it's got a bigger footprint. And the industrial market it's softened in terms of the leasing and the activity, but there's still activity there. I think, Alberta has opportunity. I think there's some negatives, but I think there's also lots of opportunity there to buy cash flow and some sustainable cash flow.
And Hendrik, is your group active in the Okanagan as well, or?
Yes. Yeah. Yeah, we're selective in the Okanagan, and again, we've been really active in Kamloops. We've been active in Kelowna. Those markets are both very strong, and even up north in Prince George, we've been doing quite a bit in Prince George. And again, there's a balance there between yield, value, cash flow, and equity growth. But there's lots of people running around in the market. One of my guys today was just telling me he's pretty active in Kamloops, and he was just commenting on how many Albertans are coming into Kamloops because they want to be in BC, but they want some yield because they're used to getting yield, and they want some diversification out of Alberta. So it was an interesting comment that he made this morning to me.
Yeah, and it's interesting because I think Victoria and the Okanagan has changed so much where it was a little bit of a bedroom, for both those markets, a bit more of a tourism segment. But I think what you've seen is those markets have definitely matured. And I think especially in Victoria, where you are seeing kind of a sustained flow of both growth in terms of investment activity, but also just with population growth as well. So that's great.
Correct.
So Janet, what are the views of Devencore's national tenants? As we mentioned on our first update for Metro Vancouver, perspectives around COVID and leasing have changed quite a bit over the last 12 months. For your group, what are the views from your major tenants in terms of their perspectives, and also just their views kind of when they think they'll be able to get back to the office, for example, or growth opportunities in Vancouver?
Okay. Honestly, you cut out a little bit, but I think you asked me two questions. One, what was it like before and what is it like now? Listen, 12 months ago, I think everyone put everything on hold, or the vast majority of people did. Fast forward to today, I'm thinking of one group popped into my head who are headquartered in Vancouver, have offices across the country. Their employees are all they work independently. So right now they're saying they're going to reduce their footprint, reduce their square footage. When I think of our larger public companies, they're not thinking 6 months ahead, 12 months ahead. They're thinking 5, 10 years ahead. And so all those projects are moving forward. But when you talk to their office managers or their HR departments, really they're scrambling, because I'm thinking of one client in particular. They're just shy of 1,000 people. And the office manager and HR department, they don't have control of the immediate future. So the simple logistics of getting those people up to the office, up and down the elevator, is something that is beyond their control. And even if the employees want to go up, the logistics of getting them in the office, if they're on the higher floors, is very difficult, especially if you're a larger firm. So we're hearing that. I also think what I'm seeing more now is many moons ago, actually not that long ago, the employer would say, okay, this is our culture. This is how we work. This is where we work. And I think the big change now is the employees are saying, okay, employee, what can we do to make you happy? What can we do to make you feel safe? What can we make you do to make you more productive? And they're actually incorporating those changes. For instance, we have one group in downtown Vancouver of decent size. They're keeping their downtown presence. But in listening to their employees, they're saying, listen, I don't want to take public transportation. I don't want to walk through a door that 50 other people walk through. I don't want to pay for parking. So what they ended up doing is getting a satellite office. I think it was in Langley. So that's another trend, is they're listening to people. They're listening to their employees, which I think is great. The overall sensation.
He's wearing a mask.
Yeah. The overall feedback that we're getting is that they all want real estate. They all need real estate. They just don't know what it's going to look like.
Yeah, fair enough. Well, I think there's this idea that once offices open up, that there's this resurgence in activity. But I think the de-risking of COVID across all levels, schools, the economy, commutes, all those different areas are what's critical to have kind of a full office resumption. So that's great. So Michael, I mean, going to a bit of a different direction, and if we haven't touched on this a lot, there has been some perspectives, but the urban-suburban debate. So the suburbs have seen a bit of a resurgence the last 12 months. People are able to work from home, and as Janet mentioned, you're starting to see perhaps some signs of satellite offices. First off, what is your view on that? And then maybe what are you telling your investor developer clients in terms of opportunities around that trend? And you're on mute there.
Yeah.
Someone's trying to, that's funny. It sounds like there's two trends emerging from that question, and probably some suggestions that they may be linked. First trend being the movement to the suburbs, which I think is already well established, and then the other one being working remotely, which is my view is emerging and not yet fully formed. On the movement to the suburbs, well, it was going on long before the pandemic. The price point for homes and all kinds out there appeals to a broad range, from first-time buyer right up to estate property owners. They're looking for more space, it seems. I will say that there's a critical mass of development out there. The neighborhoods, communities are pretty fully formed and flourishing in some forms, and there's a lot more room for growth. So when I look at the growth that's taking place in the suburbs, I don't know that it's occurring at any expense of the urban areas, and I don't necessarily see a true correlation between the pandemic driving people out there either. So I would say that the suburbs are going to continue to grow long after the pandemic is vanquished. And that work remotely business, well, that was essentially it was born out of necessity, and I'm the first one to admit it worked better than I thought it would. But it's been going on for a year now, and I've people I talk to anyway, and the consensus seems to be that it's just not as efficient for communicating, collaborating, or conducting business as the original form of working from the offices. And frankly, it's tough for some corporations to maintain the level of cultural connection from this apart. I would also tell you from what I'm hearing that there's for those companies that have multiple locations across the country, where some offices have actually reopened, not returned, but they're reopened, people are voluntarily coming in, they're outperforming the offices that are not coming in or haven't been able to reopen by significant margins. So for those reasons, senior management across this country and beyond are really looking for ways to get people back into the office as soon as it's safe to be there. And when we do come back, likely the workplace will be different looking. the day of the old cube farm may be behind us, and no doubt there'll be much more flexibility available to employees in some form or another. But I don't personally see a connection or a correlation between movement to the suburbs and the pandemic. In fact, I might go so far as to say that if you had moved from your home in Kitsilano to more spacious accommodations in Surrey, predicated on the assumption that you would never need to set foot in your downtown office building again, you could be in for a bit of a rude awakenings sometime soon. In terms of what we tell developers and investors, the suburbs is the place to watch. The people are going to continue to move there. They're going to continue to need an array of workplace, retail, entertainment options, none of which are overbuilt out there, which is very interesting. But the one thing I would have to add quickly is that the pandemic did change the landscape everywhere, and we're not in Kansas anymore. And from the altered state has certainly emerged some interesting new opportunities, but there's also some new perils. So for anybody out there in audience land that's considering taking any action anytime soon, I strongly urge you to seek the guidance of a professional advisor who is immersed in the marketplace every day. But that aside, the future looks very, very bright to me for the suburbs, and there's an abundance of opportunity.
So, Michael, maybe that's one question, and maybe this is a bit of a curveball, but for your group, when you talk to your brokers about getting back to the office, what's the kind of ratio in terms of people that are actually enjoying working from home, and what's the ratio of people that you're actually saying we do want to go back, and we want to go back at a more full-time level?
I think the short answer is that every broker would like to be in the office at all times, but it's not that simple. Like, we're running probably a 40% plus occupancy level here now, and many of these people, I mean, with some of the impediments, home care for children, things of that nature that you wouldn't necessarily think about, but are important, and they affect things. So we're doing as good a job as we can. We're not in any hurry, but we're going to do it in an orderly fashion. But it's the overall overwhelming position is we'd like to be back when it's safe to be back.
Well, I mean, that's a good transition to my question for Maury, and Maury, drawing on your perspectives, at Colliers, but also your roles in office leasing before, and office obviously is a hot topic. But I think one thing that we've tried to understand or wanted to understand a bit better is what's happening in terms of new tenant growth and activity. Because I think when people talk about what's happening with COVID, they kind of look at it as a static thing where the current tenants are not growing, the current tenants are going to be working from home. But as we've seen with job growth, as we've seen with a lot of the growth in the technology sector, there's going to be a lot more growth that's coming out of those, which is positive for the office sector. So, with that being said, want to get your thoughts and your views from your teams on what's happening with kind of new growth in the office sector.
Look, I guess the first thing I'd say is that the continuous declarations of the death of the office building are getting a bit tiresome and short-sighted, and but people want to gather with other people, and that's kind of been that way since the beginning of time. And so I don't think that desire has gone away. I think it's just the current environment. So I think we need to look beyond the next 3 quarters, and we will see a return to the office. And that said, I think we need to give people a reason to return to the office. And if you're in a crappy A-B building, that's not a reason. I think we'll see some of those buildings repurposed to multifamily rental. And when we did a deal for Colliers in November of 2019 to move to 1090 West Pender, we asked our people what was important to them. They said, this is pre-pandemic, they said great HVAC, touchless surfaces, outdoor work areas, and a landlord that actually cleans their buildings. So all of those things I think are super important. And I think if employers can provide those to their people, they'll come back to the office for sure. And I'm also a bit tired of hearing of all these tech firms that are going to tell people to work from home until like 2080 or something. And but they're all leasing space at the same time. So there's a bit of a disconnect there. So I think
And Maury, do you have any examples of some tech companies that are growing actively in this market?
No, I don't. I'm not the ones that haven't already declared their intentions to do so. But I think the downtown in itself is going to be challenged as a address. There's aging inventory. It's congested, or it used to be congested. There's far fewer services available downtown. This car tax that's being proposed will be and the property taxes are brutal. So, I think businesses are going to start raising the white flag, and I think that there's going to be increased demand for places like Pleasant, Broadway, transit-oriented space in the city of Vancouver, Marine Gateway, Broadway, Tech, Falls Creek Flats, that kind of thing.
Yeah, fair enough. That's a good call. So, maybe we got about a minute left, and I'd like to kind of wrap it up with a quick rapid fire for you. So, question number one is, what would be the one piece of advice you would give your clients in 2021? Maybe we'll start alphabetical. So, Maury, over to you.
Sure. Over the long term, no one ever lost money on commercial real estate in Vancouver.
Perfect. Okay, Michael, on to you.
Lock in long-term mortgage rates. They're almost giving the money away.
Fair enough. Janet?
Well, I'm going to say what Maury said. Commercial real estate is a great long-term investment.
Perfect. And Hendrik, what were you?
Stay in touch and stay close to your brokers.
Yeah, fair enough, right? And so maybe the last one before we wrap it up is, how do you think the industry can support the restart of the economy in terms of getting people back downtown to work, live, and play? So let's go reverse. So Hendrik, with perspectives on your end.
I think Maury touched on a lot of it. I think it's just making people feel comfortable that landlords and tenants and everybody are doing what they can to make people feel safe. And there'll be a slow migration back in as people readjust and get more comfortable. There'll be some people that maybe will take longer, but as the world circulates, soon we'll forget about it, and we'll be 100% full in buildings again downtown. It's just a question of how long it's going to take.
Yeah.
But I think the touchless surfaces, the things that Maury talked about, are becoming more important. The sustainability, all the stuff that Michael talked about previously are very important moving forward. And I think as we adapt those changes, more and more people will start coming back, because we are social. We do want to be around people for sure.
Yeah, fair enough. Janet, what's your quick response to that?
Well, obviously I agree, but I'm also going to talk again about that example of the elevator. Getting people, this is a short term, but getting people not only to their office, but downstairs to get coffee, and then back up to the office, and then back down for lunch and maybe even shopping. I think all of that will help the economy, will help the life come back downtown.
Fair enough. Michael, quick answer on your end before shift over to Maury.
We got to lead the way. We got to show them how it's done. We got to show them that it can be done safely and that it's very productive once you're there.
Maury, you've got the last word on the floor.
You can't rely on anyone to do this. And our industry is a massive network, and we have an outsized voice. So it's our obligation to use that voice and tell people what we want, and it will happen.
Right. Well, I think NAIOP Vancouver is definitely going to be focusing on that as part of our 2021 platform commitment. So with that being said, thank you again, everybody, and thank you, panelists, for your perspectives. We had a great dialogue. I hope everybody has a good rest of the week, and then please do stay tuned for our announcement for our next coming webinar, and have a great day. Thank you very much.
Thank you, Anthio.
Thank you very much.
See you, everybody.